I have really bad news for you, because what I'm about to share with you in this video will actually disappoint you, because a crisis that we have coming in front of us is way worse than a lot of people imagine, and I'm not gonna just talk about it. I'll just give you the facts and you will decide for yourself by the end of the video how bad the crisis is. See, a lot of people at this point say that, well, of course, the last few years were absolutely terrible, especially since 2020 and we had the pandemic. But we're about to get out of this crisis, and the next 5 years or the next 10 years are going to be way better than the last years were actually. But the thing is that if you actually take a look at what's happening, the next 10 years at this point are not going to be better than the last probably 50 years. And the reason for that is that the last 50 years were the period of prosperity of the United States. I know that a lot of people might disagree with me here, but if you zoom out and take a look at the broader picture, at the broader economic picture of the United States, it is very clear that the US economy grew substantially over the last 50 and 60 years. And a lot of people might say, well, you know what? I lost my house during the 2008 crisis. 2020 wasn't really easy for me. 2022, my stocks actually went down. Back in the 1990s, we had the dot-com bubble. But if you take a look at the numbers, you will realize that the last 50 years, the US economy has grown substantially. And a lot of people imagine that we're soon to get back to the old good days. Unfortunately, that is not happening. What is waiting for us next at this point is that the next 10 years or probably the next 20 years are going to be absolutely horrible and disastrous for the US economy. They're not going to be as good as the last 50 years. In basic, simple words, you can say that it is the end of the good old days and they're not coming back. And in this video, I'm going to explain to you why and how. But before I do that, I have to explain something that we call a global currency reserve. You might have heard about this point in the past, but let me just recap everything and tell you why does it play such an important role at this point. Now, if you take a look at the global currency reserves, you will clearly see that it's dominated pretty much by the US dollar at this point. Of course, the US dollar has some competition from euro, for example, but euro plays a very small role here. And if you take a look at the European economy, it's almost as big as the economy of the United States, but their currency isn't really used that much, not at least as much as the US dollar, even though that European countries are pretty advanced countries. They develop some of the most advanced technologies out there, and the GDP per capita in most of these countries is as much as the United States. And then we have the Japanese yen, we have the pound, and some other competition out there, but they're nothing. But basically, it's literally dominated, like over 60% of it is dominated by the United States. So the US dollar is the de facto currency, and that has been the case since 1945. Now, in order to understand what is happening here, we have to understand what kind of advantage the status of the global currency reserve provides to the average American. Now, first of all, it makes business easy for US companies. If you are a US company and you want to trade with the rest of the world, you don't have to think about all of those problems with exchange rates, and you don't have to worry about people accepting your currency or not. Now, imagine if you go and do business in Vietnam, and the guy in Vietnam is going to pay you in Vietnamese currency. I don't even know what currency is that. Would you accept it? Well, absolutely not. What are you going to do with that Vietnamese currency? Pay people in the United States? Do business with it? Well, it doesn't work at all, right? But if you pay the people in Vietnam in in US dollars, they will gladly accept that dollar. In fact, they can use that dollar to pay the people in Vietnam, and they also can use that dollar to trade internationally because everybody across the globe will accept that dollar. And this is just a very small example that illustrates the power of the dollar and how easy it makes for US companies to trade internationally. That gave a lot of competitive advantage to the US companies in the last 60 and 70 years. Now that gives another advantage, especially when we talk about the banks. If you are using the dollar and all other countries are using the dollar, which banks are we going to use? Are we going to use Chinese banks? Or are we going to use Russian banks? German banks? Well, absolutely not. We're going to use the banks of the United States because they are dealing with the US dollar. It just makes it much easier. And that's how the United States literally dominated the financial industry all across the globe. That's why US banks are the largest banks around the globe. Not a single other bank can compete with the US banks. Why? Because everybody wants to deal with the dollar. But that's just one of the advantages of having the global currency reserve. The biggest advantage for the government is, of course, the cost of borrowing money. Now, borrowing money is extremely important to grow your economy or anything. Now, think about that. Let's say that we are starting to do business or anything like that. I'm going to have $1 million loan and you have no loan at all. I can literally take that $1 million, go on and open a shop or a small business, and suddenly I have a stream of income. And suddenly I'm literally already ahead of you. And for you to start that business, you might actually need to work for the next 10, 20, or 30 years in order to have the capital to open your first business. So the ability to borrow money is actually extremely important. But the second most important thing is that at what rate am I actually borrowing that money in the first place? That's extremely important, because if you're borrowing money at 10% and I'm borrowing money at 2%, I can borrow way more than you do. And for me to return back that money, if I at least make 4% on my investment, I can pay back 2% back to the bank that I have borrowed the money, and I'm already making a huge profit. I can simply go and borrow trillions of dollars and I will make hundreds of billions of dollars. But if you're borrowing the money at 10% interest rate, then you have to make at least 12 or 13% return on your investment to make it possible. And that's why, and how does the lender actually decides what interest rate to charge? Of course, it really depends on how risky it is to loan you money. So you have, let's say, for example, that we have two people. One person has a very great credit score. They pay their money on time. They have their stable job. They have been paying for everything. They don't have like extra credit card interest. On the other side, we have somebody who has a very bad credit score. He has a lot of credit card debt and is very irresponsible with money. So this person clearly will get a much lower interest rate than the second person. And now the same logic applies when we talk about the countries. United States has the global currency reserve. It's the largest economy out there, and everybody around the world uses the dollar. What interest rate do you think the United States can actually charge? They will literally just offer their government bonds at the minimum rate, and there will be demand for them, unlike other countries. So if Venezuela wants to borrow money, they will probably have to offer a 15% interest rate. And that's all because the dollar is the global currency reserve. And think about that. When the government issues debt, it's actually raising money. All those dollars from across the globe are going to come back to the United States and will be spent in the United States, growing further the US economy. And that's the advantage that the dollar gives to the United States that doesn't give to any other country. The third, of course, advantage is the network effect. The more countries use it, the more powerful the dollar is going to be at this point. Just like social media. Like the reason that you use Instagram, for example, at this point is because all your friends are using Instagram, all your relatives are using Instagram, your classmates are using Instagram, your colleagues are using Instagram, and that's why you use Instagram, and that's why more people will start using Instagram. That is something what we call the power of network effect. So the more countries use the dollar, the more other countries will use the dollar, and that will keep growing the dollar. And third most important advantage is the influence. Because everybody who uses the dollar is under the US financial system, the United States can decide, listen, I don't like you, get out of my system. But if you're out of the system, your economy is not going to grow like it used to in the past or like any other economies, because you need to trade with the rest of the world. Or the United States can simply bully other countries and tell them, listen, if you trade with this country, we're going to kick you out as well out of our system. So suddenly the rest of the world is like, no, we would like to stay with the US system, and we will basically just do whatever you ask us for. This guy you don't want us to trade with them? All right, no questions asked, we will not trade with them. And that is what we call sanctions in simple words. And the United States has used sanctions against a lot of countries over the last 60 and 70 years, the countries that it didn't like. And that allows the United States, in order to move forward its geopolitical interests across the globe. So in simple words, if we can actually conclude what I have just talked about, is that the dollar at this point is basically the most important export of the United States, or the most important commodity that the United States produces. I know that it doesn't sound like a commodity, but when the rest of the world, for example, let's say China wants to sell something to the United States, what do you think China will actually produce? They will produce cars, they will produce, let's say, electronics, or they will produce clothes. But in return, what do you think the United States is going to give China? The United States simply can give them dollars. Yes, dollars. That's it. So the United States prints dollars and gives them to China, but China cannot do the exact same thing, and they have to produce cars, electronics. And China is pretty happy with that, because China can take those dollars and they will use those dollars to buy, for example, oil from Middle East over here. And that's the power of the dollar. And whenever the United States trades with any country, either it's Brazil, Canada, Russia, Australia, it doesn't trade with Russia right now, so you can take it off. Let's say Europe. The United States can simply pay everybody in dollars, while those countries have to produce something tangible, like say something materialistic, and bring it to the United States. So the United States is basically trading the dollar. I know that it sounds very unfair to the rest of the world, but the rest of the world is pretty much happy with this equation. Everybody loves the dollar. And there are pretty good reasons why other countries love the dollar. Because think about that. Let's say, for example, Saudi Arabia at this point wants to trade with Australia, and both of these countries don't trust each other. And how do they actually work? How do they actually trade with each other? They don't trust each other. Saudi Arabia doesn't trust the Australian dollar. The Australia doesn't trust whatever currency Saudi Arabia has at this point. So both of them will just simply use the dollar, and that's pretty much, and that's how they will do business in this point. Very simple, very easy. We use the dollar. Yes, the US gets that advantage, but at this point, the rest of the world can simply trade with each other because they will use the currency of the most powerful economy in the world. And that's basically the advantage that the US has. Yes, on one side, maybe it's not really bringing that much benefit to the US, but when you're trading with the US, it actually gives the United States a lot of advantages. And that's why if you actually scroll down out here, you'll realize that the US GDP over the last 50 years has grown substantially. Look at what's happening over here. You see that the US GDP has grown to $28 trillion. That's a lot, I would tell you. And this growth was fueled because of these reasons we discussed right here, because the US dollar is the global currency reserve. It gives all of these advantages to the US economy, and the US economy can borrow a lot of money. And if you take a look at the US debt at this point, it has also grown substantially because everybody was just buying US government bonds. So the world actually needs a global currency reserve. So what's the big deal over here? Why are we in trouble when the world actually needs the global currency reserve? The problem is very simple. The United States, over the last 5-6 decades, has abused its power. It's abused its status as the global currency reserve. It's like, we don't like this country, let's simply sanction them. Oh, that country is not listening to us? Let's sanction them as well. Of course, some countries can be attacked militarily if you have that power, but other countries are simply too big and it doesn't make sense financially or economically in order to wage a war against them, and that's why we simply wage against them a financial war where we actually try to get them out of the global economy. So the rest of the world does not like that, and that's why they're like, yes, we like the dollar because it's much easier for us to trade with each other, since we don't trust each other's currencies, but we trust the dollar because of the network effect that everybody uses the dollar. So because everybody uses the dollar, we trust the dollar. That's pretty much about it. That's not because we like the US dollar or we like the United States. We simply want to trade with each other. But because the government of the United States has abused its power, we have to create an alternative to the US dollar. And that's why we have the rise of China. We have other countries are negotiating, for example, to use the euro much more often. Other countries are coming out and creating some alternative currencies out there in order to have an alternative financial system where the United States does not have that power, and the United States cannot simply kick out all these countries if they don't listen to the policies and the politics that the United States is moving forward. And that actually creates a fundamentally different problem, because in order for the world to keep using the dollar, of course, they must have faith in the dollar. And because of these sanctions and the abuse of power, other countries stop trusting the dollar. But that's not really a big deal. Even if the United States kind of has a foreign policy that other countries don't like, it doesn't matter. Business is business. If it's in our best interest, we're going to use that dollar. That's pretty much about it. It doesn't really matter. Yes, there is a minority number of countries that are suffering from this. They're unlucky or whatever the reasons are. But as long as the United States has the power to maintain the status quo, the rest of the world will actually follow that system because it's in their best interest. And that creates a fundamental problem because the United States is facing a very, very serious problem. Now, in one of the previous videos, I talked about the debt crisis that the United States is following. And a lot of people at this point know that the United States cannot possibly pay off the debt that it has right now. And it's around $35 trillion. And that's a lot of money. And the problem with that is that if you cannot possibly pay off your debts, that means that people or other countries would look at the United States and they're like, US cannot pay off this debt. What does that mean? Maybe we should stop buying government bonds of the United States. And when people stop buying government bonds of the United States, that means that the power of the United States to keep the dollar as the currency reserve will actually diminish. And if you take a look at the US budget at this point, you will realize that over the next 10 years, the United States is going to run a very huge deficit. Yes, this debt cannot be paid off even if the United States stops literally borrowing money, but the United States cannot stop borrowing money because based on the estimations that we have at this point, over the next 10 years, of course, if I would actually have the data for the next 20 years, I would actually show you, but as of now, I just have the data until 2034. And until the next 10 years, every single year, we're going to run a deficit. And the longer it runs, the bigger the deficit is going to be. And 10 years from now, we are going to spend another extra $2.5 trillion. Now, think about that for a moment. If you want to pay off your debt, first of all, what you have to do is that you should stop borrowing money. If you are spending $10,000 and you're earning just $8,000, and you have already a lot of debt, the first thing that you're supposed to do is to at least balance your budget, which means that reduce your spending. So you're spending, let's say, $8,000 and you're making $8,000. Yes, you have a lot of debt and that debt is growing because it has interest on it. But in order for you to pay it off, then you should suddenly start either earning more money or at least maybe spend less money. And that money that you're actually saving is going to go towards paying off your debt. And over the long run or some kind of years, you're going to pay off that debt. That is the very logical thing to do. But based on the focus that we have over here, that is not going to happen in the United States. United States is not intending to cut its spending in order to pay off its debt at this point, at least in the next 10 years. And the longer this runs, the bigger the debt is going to be, and the less likely the United States will ever pay off the debt. And if you even take a look at what do I have here? If you even take a look at the detailed numbers of where the money is coming to and what exactly the US government is spending, you can clearly see that it's impossible for the United States to even balance its budget in the next 10 years. And what signal does that send to the rest of the world? What the rest of the world is thinking when they look at the US debt, that it's over $35.3 trillion, and even if they do the math, the government cannot pay off that debt. Now, at first glance, it's not really a big deal because as long as you can service that debt, people don't really care much. Why? Because that debt exists. We are not obligated to pay off that debt. If we can pay the interest on that debt, that means that we can simply maintain that debt. It's simple math. But what happens to the debt that has an interest? Because every debt has an interest. Over time, that debt is going to keep growing. And it's basically mathematically, we can say that, oh, maybe 20 years from now or 30 years from now, it is going to become a real big problem that the United States will not be able to solve. But the problem with that is that if you are next 10 years going to run a deficit again and again, that period is going to shorten. So if a crisis, for example, is supposed to hit 30 years from now, it is going to hit like 5 or 7 years from now. Why? Because instead of literally balancing your budget, you're making that debt bigger and bigger over time. So if you can't pay off your debt, how are you supposed to ask people to trust you? How are other countries that are looking at the United States and are like, oh, wait a second, now we have money, and instead of buying US government bonds, they're going to think twice. Should we actually buy US government bonds when the United States cannot pay off its debt? I mean, what if we buy the government bonds today and they will not pay us back? That means that the United States is not really a good investment. Lending money to the US government is not really a good investment. And if they do the math, and that's the conclusion they will come up, they will start selling off their government bonds. You have to understand that at this point, the entire world is filled with US government bonds. And what happens when you have a lot of these people suddenly realize that, wait a second, the United States cannot ever pay us back? What they will try to do. Now imagine you have a stock of a failing company. What are you going to do with that stock? You will start selling that stock. And when everybody starts selling that stock, what happens to that stock? Let's just take very simple logic. What will happen to that stock? That stock will simply see itself just plummet just like that. It is going to go down. It's going to lose its value. So the more supply of government bonds in the market is going to be, and less demand of it is going to be in the market, suddenly the value of these government bonds is going to rise. And in order for the US government to issue new debt in order to raise more money, because as we know from the numbers that we have in front of us right here, is that the United States is going to keep running a deficit for at least next 10 years. And if it's going to run a deficit for the next 10 years, there is unlikely that it will ever balance its budget at least in the next 20 or 30 years at this point. What does that mean? That means that borrowing money for the United States is going to be significantly more expensive than it's right now. And that's why if you take a look at the debt of the United States, you will realize that United States is in a huge trouble. I want you to take a look at this chart and just ask yourself a very simple question. What do we have here? This is the peak of the debt during 1945. And what is 1945? That is when World War II actually happened. And now this is the debt that we have today. Now, think about that for a moment. We have today as much debt as the government had after World War II. Like World War II was the greatest crisis in the history of the United States, where hundreds of thousands of soldiers have died. The entire world was ruined. Of course, it made the United States the most powerful economy in the world after that. But nonetheless, it was the greatest crisis where the United States had to borrow so much money in order to survive. So I want to ask you a simple question. Did we have anything similar in the last 10 years, in the last 5 years? Well, absolutely not. So why do we have the same amount of debt that we had during World War II? Is that a very good question, right? Now, the second problem is that after World War II, if you kind of pay attention, the amount of debt drops significantly. And the reason for that is that the rest of the world was ruined absolutely. And the United States was this superpower that started exporting its technology, its labor, its services to across the globe, and a lot of money was coming to the United States, and the United States simply paid off all of its debt and brought its debt level down. But now, can the United States do that? Well, the rest of the world is not ruined. Yes, we have some crisis over here, there are some wars happening, but overall, you have a real competition with China. You have like a crisis in Europe with Russia that's trying to kind of increase its political influences in that part of the world. You have other countries. You have the BRICS that is literally becoming an alliance that will compete with the rest, with the United States and NATO and European Union. You have the European Union that is not ruined and has its own interests, and they don't need as much the United States as they needed them back in 1945. So we don't have that competitive advantage that we had back in the days. And that's why, and if you take a look at the spending, United States cannot possibly reduce its spending in the next 10 years. And that's why if you take a look at the forecast of the debt of the United States, it is only going to grow. It is going to be probably twice the amount that it was at the peak of World War II. And at this point, it's probably going to be like 180% of the GDP. Now, if you're a tiny small country, you can afford that. But if you're in the United States, you cannot possibly afford it because you have geopolitical interests all across the world. And this is the biggest problem that the United States is facing in the next foreseeable future. And the second problem is the net interest cost in the next few years. Now, this is for the next 10 years. You see, whenever you borrow money, you have interest. And as long as you can pay that interest, it is still fine. And the problem is that when you stop being able to afford the interest on your loan, you will be in a real trouble. As of today, the United States is spending around, let's say, $700 to $800 billion just to pay off its interest. Let's say $750 billion. I think we can, if we Google this out, we can actually find out the exact amount. But it's a lot of money. The United States is spending $750 billion just to pay the interest on its debt. So it's already a big deal. Even if the United States today try to actually pay off its debt, it cannot possibly it can barely pay off its interest, leave alone paying the debt in the first place. But that's just peanuts. That's just part of the problem. Because the real problem is happening over here. By 2034, according to the estimations that we have right now, United States will have to make around $1.7 trillion interest payment in order to be able just to afford that interest. Now, a lot of people don't even understand what it means. Now, just to give you a glimpse of what it really means. If you right now pull out the budget of the United States, you will realize that United States' biggest spending is, of course, military spending. United States maintains the largest military all across the globe that has almost 1,000 military bases all across the globe. And that gives the United States enormous power that doesn't have any other country across the globe. And the United States spends $900 or probably $950 billion on defense. Now, take a look what is happening to the defense spending over the next 10 years. By 2034, the defense spending is going to be a little over $1 trillion, and the interest payment is going to be $1.7 trillion. So we are going to spend $1.7 trillion on defense. Sorry, we're going to spend $1 trillion on defense, but $1.7 trillion just to pay the interest on the debt. Do you see how catastrophic that is going to be? We could have actually spent that money on defense and grew the military. We're going to have spent this money on the economy, on research and development, whatever, but we can't. Because if we don't make this payment to the interest, that is literally going to be an overnight failure of the United States government. And that's why a lot of people at this point are very concerned about the problem that we have over here. But we have to understand is that right now we have a real competition from China and the rest of the world. And competition, in simple words, means war. So we have war. And whenever you have war, you have high prices. Now, after World War II, we did not have war. I mean, we had some kind of a war, but overall there was real dominance by the United States. Right now, we have real war. And I want you to understand how the situation we have on the ground right now as of today is going to impact the wars that we're going to have in the foreseeable future. Because China is a real competition. And if you take a look at the numbers, you will realize that China is already leading the world in a lot of industries. Literally in electric cars, some kind of raw materials, gold, 5G technology. There is a list of industries where the United States is literally just losing and China is winning. And it's not just China. You have other countries that have overtaken the United States in a lot of these aspects. Just take Taiwan alone. It's one of the largest producers of semiconductors, and United States literally relies on Taiwan for its semiconductors. So in order for the United States to win this war against China, for example, what it has to do? Can it literally borrow money in order to support its companies to win over China? Well, of course not, because the United States is not in a position to borrow money anymore. So that is no longer that powerful weapon that we had in the past. It was in the last 50 years, last 70 years, but no longer. So if we want to actually fight with China, if we want to win the war against China, what do we have to do? either we have to invest more, which means that we have to work harder, longer hours, be more efficient, or impose what? Tariffs on Chinese products. And that's why it doesn't really matter who becomes the president of the United States at this point. Both administrations, the Democrats or Republicans, are going to impose tariffs on China and other products from across the globe in order to maintain US competitiveness. Because if we actually if we actually leave it to the free and fair market, then producing things in the United States is much more expensive, and the United States cannot simply compete on cost with China and the rest of the world, and that's why US consumers will simply shift to the rest of the world, because of globalization, and US companies will literally just lose their competitive advantage, and they'll just lose everything, and that's simply going to be, over the long run, the end of the US economy. And that's why the United States is going to impose tariffs. And I'm not going to tell you anything, but just think for yourself what exactly extra tariffs means. And if you even take a look at the plans that the government already has, you will realize that they have already planned a lot of tariffs on a lot of products from across the globe. Now, the second consequence is, of course, China's supply chain. You see, in order to bring prices down, you need an efficient supply chain. Yes, something is produced, for example, in China, Vietnam, Taiwan, Europe, or anywhere in the world. It's not just about producing it. You need an effective and efficient supply chain so we can actually deliver it in the shortest period possible at the lowest possible price. And the US supply chain was the largest supply chain, but over the last 50 years, China has created an alternative supply chain. So either the United States will rely on China for their supply chain, and that's not something the United States wants to do because it will be at the mercy of China, or that means that invest more money in order to build an alternative supply chain that is going to be competitive to China. And investing more means that we need to work harder, we need to raise taxes, we need to be more efficient. So investing more basically means that prices are not going to go down in the foreseeable future. When you invest more, you have to basically run it in such a way that that investment should pay back. Then the next problem we have at this point is the geopolitical influence. As I told you earlier, that United States being this powerful country and having the dollar as the global currency reserve gives it a lot of power over the rest of the world. And United States moves forward its geopolitical interests. It's literally negotiating with other countries and pushing forward whatever it believes. For example, it wants to integrate other countries more with the United States and not the rest of the world. Back in the days, it was pretty easy. After World War II, the only competition that the US had was Soviet Union. And if you actually take socialism like communism and you take the capitalism, the choice, of course, obvious because capitalism is going to win. But that competition no longer exists. Like everybody, the rest of the world, the entire world today is a capitalistic country. And when you want to compete with countries like China, India, and Russia, it's not easy. It's not as easy as it was back in 1950s and 1960s or in 2000s. Like back in the 2000s, those economies were very weak. Like go back the year 2000, you have very weak China, you have weak Russia, you have Europe that is literally just got up with the euro and is barely trying to kind of get on its feet. And now compare that to the world that we have today. It's an absolutely different world. It's a completely different world where the United States, in order for it to move forward its geopolitical influence, it's not going to be as easy, which means that we will have to actually sign better deals for other countries or maybe even give up something, and that means that more cost on the Americans. The next problem, of course, we have that there are a lot of trade agreements happening across the globe that are not in favor of the United States, or even US is not included at this point. BRICS is simply a trade agreement, or not simply a trade agreement. It's basically a partnership between China, India, Russia, South Africa, and a lot of more countries are trying to join that agreement or partnership. And the United States is not literally welcome to that partnership. And one of the rules of being part of it is that you should not use the US dollar. And that partnership is growing. It was founded like 15 years ago. And as of 2024, I think like 70 countries have applied to be part of it. And some of these countries are really large, strong economies. For example, some of them are US allies like United Arab Emirates. And as far as I know, that there is a country, a NATO country, which is called Turkey, that now has applied to become part of the BRICS. And the bigger the BRICS grows, the less influence the United States is going to have over these countries, because within BRICS, they were going to have their own financial system, their own banks, their own rules, and the United States is not even going to be part of BRICS. What does it tell you about the future where the United States have to compete with alliances such as BRICS? And that again means that more trade without the United States, and that means that less economic growth for the United States in the foreseeable future. And the fifth biggest thing is the military power at this point. You see, if you take a look at the United States, you will realize that the United States is maintaining the largest military in the world. And I don't want to be naive. Like, think about it. Why do you think the United States keeps such a large military? Like, the US has almost 1,000 military bases all across the globe. Other countries probably have like 20, 30 altogether. And the United States does that. It's because it projects power everywhere. And when the US negotiates with other countries, it can simply tell them, listen, we got the largest military, so don't mess with us. If we told you to do something, please do that. If we want you to be part of us, please be part of us, because we can actually create you some trouble. It's as simple as that. And the United States for the last 50 years could do something like that. But after the fall Soviet Union, the power of the United States using its military is only increased substantially. But that thing doesn't exist today, because if you want to actually bully somebody with your military and use it as a negotiation power, you have rivals such as Russia and China who are going to come to that country and sign some kind of a deal or an agreement that would not allow the United States to simply use its military in order to convince them to be more influenced by the United States than any other country out there. And that means that the United States will no longer be able to sign such a favorable deal with all of these countries like it could back in the days. And final problem is, of course, no more cheap money, no more debt. United States cannot raise as much money as it used to in the past. United States cannot issue as much government bonds like it could in the last 50 years. And that means that if we can actually borrow less money in the foreseeable future in order to fix these problems that we have over here, what does that basically tell you? Like, these problems that we have over here means that we need a lot of money, right? And the easiest thing would be is, of course, to issue debt at this point in order to fix those problems. But this option is no longer available because of the problem that we have just talked about previously over here. So that option is no longer available. That means that it is going to be at the cost of consumers. And that means that in the next 10 or 20 years, prices are only going to be higher and higher and higher for the average American. But in order for the United States to solve these problems, that also means that the United States might actually need to raise taxes. I mean, where else the US is going to take that money from if that is no longer an option at this point? It must take it somewhere, right? And of course, that somewhere is definitely you. Raising taxes on you, income taxes, payroll taxes. So I know that at this point, a lot of politicians don't really care about that because all of these politicians simply want to get elected to the office. But over the long run, we have a very serious problem. But these problems also create a fundamentally different problem. That means slower economic growth over the next 10 years probably. And that's why there is only one way to fix it. There is only one solution to it. I know that this seems very gloomy. It doesn't sound very optimistic. That's why counting on the fact that things will go back like they were back in 2018 or 2017 or 2016, it's not going to happen. And relying or hoping for something like that doesn't really make sense at all, because if we take a look at the numbers and the facts that we have on the ground, that is impossible to expect anything like that in the foreseeable future. And that doesn't mean that the United States is going to collapse. It doesn't mean that it's going to be the end of the United States. It simply means that prices are going to be higher. It simply means that taxes are going to be higher. It simply means that the economy isn't going to grow as fast as it used to, for example, the last 50 years. So will there still be rich people? Yes, of course. Will there still be poor people? Yes, of course. So the only way to protect yourself is to take care of yourself and start investing as early as possible while it's still possible. Start buying assets, start buying stocks, or at least start educating yourself. Because if you don't do that and things are going to get worse and worse with each consecutive year, at some point it's going to be impossible. It's going to be way more difficult than it's now. So the earlier you start, the better it is going to be. Because those opportunities that we had, for example, 10, 20, 30 years ago are no longer available. But while there is still a chance for you to do something, I really encourage you to actually think about that and take some serious action for your financial future. Thanks for watching, and I will see you in the next one.